All right, welcome back. We've got our stock market update for the week. And we talked about last week, we were looking for a bounce in the markets, and that's what we got, a continued bounce. An insane bounce from the August 5th Japan carry trade meltdown, whatever we want to call that now, the mini crash that we had. But market's looking strong, and the S&P is about 1.5% away from all-time highs. We'll see if we can pierce through there next week. But let's get into the news, and we'll come back to some charts, and we'll look at the heat map. We'll look at the heat map after we look at some of the news. So this week we had a nice strong rebound. The beginning of the week was pretty flat. We had some red on Thursday when the Jackson Hole meeting kicked off for the Federal Reserve, and then today we had Jerome Powell give his speech, which felt like a bedtime story. He was reading the history of the last couple of years when it comes to his monetary policy. And we'll talk about that. But ended the week green in the markets. So we'll look at that in just a moment. Next week, we're looking for Nvidia's earnings. That's going to be the big catalyst next week. And I don't think there's too much economic data next week. But if there's anything important, I'll let you know in the market update next Friday. But as far as this week in the Jackson Hole meeting, it was very interesting to see the Fed kind of pivot from inflation to we're looking at the jobs market. So I forgot the quote that he said exactly, but it's time to change course, something like that. But they're looking at starting to cut rates. They've raised rates quite drastically, and then they've held them steady, and now they're saying it's time to start reducing our interest rates. So how much, how fast, how far, we'll see. Their next meeting will be in September. The question is going to be, are they going to do a 25 basis points or a 50 basis point rate cut? And they probably don't even know. They're waiting to see some more data. One of the other pieces of news that we got this week I didn't write down was we had a revision to the jobs numbers for the year. The revision was that they miscalculated the amount of jobs added by 880,000 jobs. So almost 1 million jobs that they overestimated. So this is the biggest problem that I have with the Federal Reserve, is that they're so data dependent, and that data is looking in the past. So just like they were saying inflation is transitory, we're going to keep pumping money into the market, keeping low rates, and then all of a sudden they say, oh, it's not transitory. Our data is now showing that we're having rampant inflation and it's entrenched. Now we got to jack up rates. So we're fortunate that we haven't seen the rapid increase of interest rates really stomp down the economy. So that is the problem I have, is they're so data dependent, and this data is old. And as we see with this jobs number, sometimes the data is just wrong or incorrect and could be misleading them. So the Fed is always late. They're always behind the curve. And the question will be, can we achieve a soft landing? Can they drop interest rates before we hit a recession? Or will we hit a recession and then they have to drop rates more aggressively? So that will be to be determined. But based on the speech that Jerome Powell said, based on what he said today, it seems like they understand that the main risk now is no longer inflation. It is a weak job market, which would cause the economy to really slow down. And then they would really have to drastically cut rates. So if I was the Federal Reserve, I'm no genius. I would do 50 basis points and send the signal to the market that we're serious about cutting rates, and we see that inflation is cooled. And again, people hear inflation is, the Fed will say inflation is, we've beat inflation. And people go to the grocery store and say that's a damn lie. And they're saying they have stopped prices from continuing to go up, which is true. Prices are no longer increasing at the rate that they were, but they're still high. So the average individual is still struggling to pay because the cost of things have just drastically increased over the last few years. So they can sit there and say that they've beat inflation, but They were also late to the party and a big cause of the inflation by printing all the money and stimulating too long. So that's a discussion for another day. Um, but I do have a lot of faith in Jerome Powell. I just don't know if they can get a soft landing achieved like they want to, if they're going to be completely data dependent. So they did say inflation is on track. They're confident in a sustainable path back to 2%. They do have labor market concerns. The Fed does not want to see further cooling in the labor market, signaling a shift away from aggressive rate hikes. We know this. They haven't raised rates in a year. They've been holding steady. Now it's time to cut rates. Soft landing. Jerome Powell is optimistic in achieving a soft landing and avoiding a severe recession. Now, this is where I think we are probably walking into, if not already in one, a small baby recession. And we'll see if cutting rates will be enough to get us out of that quickly and make it a shallow recession versus something worse. So we'll have to wait and see. But recession, no recession, depression, whatever, in my opinion, if you're a young investor, don't worry about these things. If you have a 10-year plus horizon, the stock market, your stocks, if they're good companies, or the stock market in general, will be higher 10 years from now than it is today. Whether we go through a recession, it won't matter. The stock market will recover. It always has. Now, I'm not going to say it always will, because there eventually will be a day where we could be like Japan, where we have a blow off top, and then it takes 20 years to get back to those all-time highs. But I think we're still a ways away from that happening. So anyways, that's a recap on the Fed meeting. Went off on a little bit of a tangent when it comes to the Fed. I've got strong feelings on the Fed, and again, we'll get into that in another video. But some other news: retail sales were better than expected, which is good. That means the consumer is not as soft as we've once thought. Now, again, I think the consumer is just rotating where they're spending their money. They're spending less on travel in some instances, and maybe less on yoga pants, but they are still spending. Never doubt the American consumer. And the housing market, we had new home starts, which was better than expected, and then existing home sales was better than expected. So that's good, because we're also going to see the rates come down, which should spur a little bit more activity in the housing market, which is good for deals. It's good for banks. It's good for lenders. It's good for the economy to get things moving. It's good for people that are looking to finally move out of their house and move around. So that'll be good if that rate continues. Now let's look at the heat map. Nothing stands out here. You have Nvidia that's just making a nice recovery, but a lot of things here are green, but just slightly green. And there's a couple things that are red and just slightly red. So again, it was pretty flat week. We had a red day yesterday and a green day today that kind of canceled out, and the rest of the week was kind of flat. But it did feel like a good week in general. So let's take a quick peek here. S&P 500, almost there. NASDAQ is about 6% away from its all-time highs. You've got gold chugging away here at its all-time high. Breached another all-time high today. Oil kind of just hanging around here. Kind of interesting. It would be really good for the consumer if we can get oil to drop back down a little bit. You've got a nice pump here on Bitcoin. Boy, it's a messy chart. But a nice 6.5% day today on the Bitcoin. And the Russell 2000, a nice move today as well. Nice recovery from the August 5th lows. Let's take a look at the dollar, because the dollar's making a move. I haven't looked at this chart in a while. But we broke this trend line, which wasn't really an important trend line, but we'll get rid of it. So dollar is weakening, which is going to be interesting. That is going to be good for things like gold, things like Bitcoin. So we'll see if that trend continues or if we get some support here. And the other thing I wanted to look at was the rates. So we've got the 10-year yield already down to 3.8. Wow. We've been here before and we had a recovery. I'm looking for another play in the TLT. I played this back here. I had a really nice trade on the TLT. I would love to see a sell-off here if maybe we get a hot inflation number within the next month or so. Or even if the Fed were to cut rates by just 0.25 in September, you may get a sell-off in the bonds, which could be an opportunity. I think in 2025, there's going to be returns to be had in the bonds. Now, when I'm talking about the bonds, I'm not talking about the coupon that you get from holding the bond. I'm talking about buying bonds and then selling them at a later date. Because the interest rates have gone down, the price, your bonds will be more valuable because they're paying a higher yield because interest rates would have come down. And people are looking to lock in because there's a recession scare or something going on where people want to put money into bonds. So I don't like the bonds here because they've already run up so much recently. But if we can get a pullback on the bonds, I would like to allocating into the TLT or some sort of bond equivalent just to get the price appreciation. I'm not in the bonds for the 4% yield. I'm not in it for that. I want a 20% return like I got back here on the TLT. As far as stocks, not a whole lot to talk about here. Nvidia almost back to all-time highs going into earnings. Pretty interesting what's going to happen there. We've got Tesla not doing a whole lot. It just had a huge red day yesterday and regaining some of those gains. You've got the SMH with a nice recovery over the last week or so. So that's good to see. Amazon not doing a whole lot. Big red day yesterday. Again, yesterday was kind of a pain trade when it comes to the technology, Mag 7. And I think you're going to continue to see some money flow out of the technology and go into things like real estate, REITs, solar, things that are interest rate sensitive will probably get a bid, a rotation. So we'll see how long that continues, even the Russell 2000, things like that. Google we talked about. I did scoop up some Google this week, just a little bit. I'm going to be dollar cost averaging into Google every week here until we get back over 175. Then I'll slowly, I'll pause my dollar cost average there, wait for another pullback. I don't know why I squiggled this, but I would love for this to happen. Just keep consolidating. Let me pick up shares weekly, and then eventually the market will say, you know what, Google's a great business, and some of these fears are overblown, and they'll get back into it. So the Qs here, we're at 480. Wow. So these blue lines were the dollar cost averages I did. I'm waiting for these here to trigger. May not get those for a while. If ever, we'll wait and see. But that's about it for this week. So it felt like a busy week, but not a whole lot really in the economic data, just waiting the Fed. There wasn't a lot of earnings going on. And next week will be a big week just for Nvidia. And definitely stay tuned for that. I will be doing a bullish trade on Nvidia. And I will do a video going over their earnings. I'm expecting the earnings to be really good. We'll see what their guidance looks like. So until then, have a great weekend and peace out.